business sector has welcomed a slim $4.2 billion surplus. But with the budget returning to a deficit from next financial year, the Australian Chamber of Commerce and Industry has said there needs to be a greater focus on boosting productivity and curbing spending. Now, let's bring in the Chamber's Chief Executive, Andrew McKellar, who joins us live from Canberra. Andrew, appreciate your time. Thanks so much. Take us through your assessment of the budget papers. Firstly, let's start on what you liked. What were the highlights for you when you looked through those papers last night?
Well, hi, Ash. Great to be with you. Look, I think there are a couple of points that really jump out. Clearly the government has tried to strike a balance. They've obviously put a lot of emphasis on addressing cost of living pressures, particularly for the lower paid and also for the smaller end of the business sector, and equally providing support to the most vulnerable in the community. So I think that's very clear as part of their strategy. They have tried to achieve a balancing act in terms of starting the process of budget repair. From a purely business point of view, there's probably not a lot, mainly focused around small business. I think the thing that obviously does jump out is this energy cost relief. $650 for around up to 1 million small businesses that are out there. Obviously that is welcome, but we need to go further in terms of making sure that the energy market, we are preparing for the future, that we're addressing the issues around generation and distribution in energy, including renewable capacity as part of the solution. We can't just rely on price caps and rebates if we're going to get long-term solutions.
Okay, as I mentioned in the introduction, everyone's pretty pleased to see a surplus. It's always good news for any government to be able to hand down a surplus and be back in the black. But we know it's going to be short-lived, and as I mentioned, you've got some concerns around what that will mean for productivity. What is your gripe in particular on that point?
Well, I mean, clearly a lot of the heavy lifting still has to be done. And if we are going to really address the fundamental challenges in the Australian economy, if we're going to be able to get wages moving sustainably, if we're going to be able to get back to a situation where we have low inflation growth, then there does need to be some investing for the future. So, we do need to look at making sure we still have a very good pipeline of infrastructure projects where there's a strong business case, where there's a link back into improving efficiency, our ports, our other transport infrastructure, our airports, all of these things are critical. Skills and training is another area. So the government has put aside a contingency there for a new national skills agreement. That agreement is not yet finalised. It involves the state and territory governments. So, getting that skills and training mix right, making sure that we are providing young Australians, all Australians in the workforce with the skills that they will need to really boost our productivity. Those are a couple of areas of very fundamental investment, and energy is another one which we just have to keep coming back to.
The Treasurer keeps telling us that this budget was carefully calibrated. We know that the government was walking a fine line between trying to reduce any inflationary pressures on the economy while also helping people with some of those cost of living issues that you were alluding to a little earlier. Do you think the government has achieved that? There has been some suggestion today that this could be too much of a stimulus for the economy at this point in time.
Well, I think it is. It's a very finely balanced judgment. I think the government has thought very carefully about it. It's a very detailed process to put together a complex budget like this one. There is, I think, a narrative there that the government has been able to point to, but there is really a test, and I guess we won't know now for several months whether they have got that balance right. It will be in part the judgment of the Reserve Bank whether they see that the pressure is being taken off inflation. There is significant stimulus still there in the budget, and it's not just the $21 billion in cost of living support and other measures. There's also a significant uplift in terms of wages, in the aged care sector. All of those things are going to flow through. Whether that means that there are concerns on inflation, we'll have to see. But that is the risk. If the Reserve Bank thinks that that is a concern, then we will see higher interest rates as a result.
Andrew McKellar from the Chamber of Commerce and Industry, really appreciate you joining us with your analysis today. Thanks so much.